Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 15th day of January 2015, and this is the daily report for gold and silver. What a difference a day makes. Incredible surprise move by the Swiss National Bank, sending the precious metal scurrying higher, specifically gold. That's the percentage leader, up 2.37% or about $29. Currently trading call at 1257, 1258. The low today, 1226.20, and the high today, 1266.40. Silver also showing a gain, but a real small gain. Actually, right now trading almost unchanged, 1684, 1685, puts it up roughly a penny on the day. Now, in terms of the highs and lows, it has had a range today, of course. We've seen a low of 1672 and a high of 1724. More on silver towards the end of the show. Wow. You know, traders, what a difference a day makes. As you know, we are currently in a trade. We're long this market roughly 1217.50, 1217 and a half. If you recall, we were really looking at this long, and I've blown it up, of course, but this long-standing resistance line right here. We're also looking at a series of tops here and here to ascertain whether or not what we were looking at was a simple counter trend or an actual pivotal reversal, if we could actually claim that as that. And we had none of the real information needed to make that claim. However, when we take a look at the way the markets reacted over this last week, more and more information, more and more data is pointing or alluding to the possibility that we have been looking at a key reversal. Now, first of all, as we put this trade on, this wasn't what I'll call a picture-perfect trade, because we put this trade on right here once it broke out, and we put it on this day right here. It's this top, and we actually took some heat. As this marketplace came down, we took some heat on the trade, but then it began to move up. We then went ahead and trailed our stops just below 1225. The basis for that stop, traders, if you recall from the last couple of days, was the fact that we had seen these series of lows right in here. And my sense was that as long as those lows held, we had a real indication, of course, that this market could be headed higher. Now, no one, including myself, had any clue as to what we would see come out of the Swiss National Bank as they have decoupled the Swiss franc from the euro dollar. That raised the value of the Swiss franc by 30%. It dropped their equities or their stocks, I believe, by 10 or 15%. 10% was the figure that I heard. And we saw gold have a tremendous rally. This, of course, being half-day candles in here. We took a little bit of heat here, but as you know, our stop's sitting at below 1225, so we were never really close to getting stopped out, although we were closer than I was comfortable with. We are now a little bit of ways from there, and I absolutely feel the relief. Now, that being said, what can we make out of this move? Well, first of all, on a technical basis, there were key elements that we were looking for. First, we were looking for the market to trade and close above this particular price point coming in here, which is, I believe, was around 40 to 41. We've absolutely taken that out. You can see that the other day that was, once again, our area of a little bit of resistance. The second and most critical area is this former top right here at 1255. Now, it takes no rocket scientist to see that we're currently trading over there. And although we're well off these highs at 66, we're still trading, call it 58, 1258. So we're trading above this point. A little bit too early for me to want to move stops up. We're in at 17. Market is trading at 57 or 58. So we've got some decent profits in for the first trade of the year. I'm happy with it, and the question is, where can we see this market go to? And we're going to be exploring that through today, tomorrow, into next week. That's obviously going to be the most important topic we can cover, because obviously it's having to do with our exit strategy on our most current trade. So traders, we're going to obviously need to put in some new support and resistance levels to move back to some of the more recent highs that are above this particular price point, 1255. That is under the assumption that we get the market forming a base and holding in this particular area. In other words, 1255 becoming support at this point. We can then go ahead and plot what area we think this market has an opportunity to move to. And so traders, to do that, we really want to look at a much more long-term chart, this being a 3-day chart. And the thing that I like about this most recent move in gold is when we look at this long-standing resistance line right in here, we have a definitive pop above that at this point. It was just at and a little bit above prior, but you can make no mistake at this point, we are absolutely there. So now, what are the levels or targets that we want to look at? Well, we're going to want to look at some of the more recent highs, which is here, and this one right in here. We're also going to want to now create some new fib retracements, which take into account this entire price action, meaning 1400 or 1400 here, and this particular one, I think that was 1351. We'll have to take a look, and then from there ascertain some new numbers. But it's an exciting time because the point that I always try to make whenever we look at any of our trades, whether it's successful or unsuccessful, is that nobody knows what's going to happen tomorrow. But what we do know is that the only way to really profit from these moves is to be positioned and to be positioned correctly prior to the move happening. You can buy the breakouts, and Lord knows I've done that on many occasions, but I'm much more comfortable buying the beginning of the market as it's setting itself up and being positioned for the breakout. And absolutely, in this case, we've done just that. So traders, we're looking at our weekly chart of gold, and this has got our most long-standing resistance line in there. And once again, just for illustration purposes, no doubt we have had a clean and sufficient and accurate break above that long-standing resistance, and that certainly could spell higher pricing ahead. As I said, in terms of where that price goes, we'll begin to plot that over the next couple of days. So traders, just to give you an idea of the kind of havoc that has been received due to the announcement by the Swiss National Bank, this is gold as it's paired against the Swiss franc. Whenever we're looking at a what I call a spot market chart, which is XAU USD, here we have XAU Swiss franc, and so you can see the dynamics of the strength in the Swiss franc as it really affected gold paired to Swiss francs. Tremendous, tremendous move in the marketplace. I'm wondering if these are misticks, how low it went, but with the incredible valuation, or a 30% valuation of Swiss franc, this could easily be a correct number. I'm glad that we're on the right side of the fence on this trade. I'm certainly glad that we weren't on the wrong side of the fence and trading currencies in this market. Incredible, incredible, incredible move. So traders, we're looking at our weekly E-mini S&P. Continued pressure. The pressure was weakening today. Of course, I believe the Dow Jones closed off about 50 points, well off of the lows, but we're still solid red candles here, and we're still moving off of this top that we identified. We were looking for a top either at 150 or 161%. We certainly got some sort of a sell-off at the 150 level. Traders, we're looking at our dollar index. This is the weekly chart. This weekly chart, of course, is in Japanese average format. We looked at this yesterday. It's really interesting to see that we've got both gold and the dollar moving in tandem, which means that the $29 plus move we saw in gold is only part of that move. The rest of that iceberg is the amount of room it had to overcome to really compensate for dollar strength. And when we remove this study here on our weekly, you can see that we're well over this particular level here at 92, back up at around 92.59. We made a new high on the week, and we're currently trading off of that high. And then traders, lastly, we're looking at our crude oil market right now. We have had a return to lower pricing. These levels that we identified have absolutely not held. These are pretty critical levels because they're both 76% retracements. Once we're below, well, we're in a meltdown anyways, but really, once we break below here on a technical basis, the real support in the market doesn't really come in till about $32 a barrel. Now, I'm not saying I think that the market's going down there, but on a technical basis, we don't really have a lot of areas that we can look at because we haven't seen the price of oil at this point in quite some time, in years to say the least, at least since 2009. And traders, that brings us last but not least to the silver market. We're long gold, we are long silver. As you know, I have not been nearly as bullish on silver as I have been on gold, but I did put the trade on because I believe that we had some upside potential. I believe right now that you can see that the market really hasn't had the ability to take off the way that gold did. Of course, it's not going to react as that safe haven in the same way that gold will, but it has come off. It has found support. We're going to maintain our current long position in silver, maintain our current stop. We will maintain our current long position in gold, maintain our stops. I'll be looking to trail stops up probably Friday or Monday. I just want to see what kind of ranges develop now that this incredible news is coming into the market and is being digested by traders at large. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.